After looking at Gulf Keystone yesterday, you could say that almost anything else in video form would be an anticlimax. But we do have Xcite Energy, which is followed by traders and investors almost as much. The call here before was at above 105. The shares could retest the September peak, which was just below £1.40. The basis of that was that new support during March and early April was coming in at or above the £1.10 initial January 2013 peak. As we now know, the shares have fallen quite sharply below £1.10 after a struggle, let's say, to try and keep that level going. And we're now back at a line of support from July and the 200-day moving average at just around the 100 pence mark. So far there's been a bounce off that level, just below that level, and that leaves the door open for recovery and maybe a return back to £1.20. But the problem is in this market, especially after the RSI failure that we've seen here below neutral 50, and really the loss of the £1.10 area so easily, you've got to be concerned that there may be further losses. So on that basis, I would really only be going back in on the long side as a sort of somebody fresh to this market on an end of day close back above £1.10, which would show acceptance of the old January peak. If you're still long and you don't want to get out, you've got probably down to an end of day close around the 95 pence level as your ultimate stop loss. I think if it went below that, which would be below February support, the gain would be up in the near term. Obviously, it's a long-term situation. You would have your own criteria in terms of holding or not holding the stock. But this triangle here with the two failures at above £1.20 and hopefully support coming in at £1 is where the shares should remain. If they break down much below that feature, then there could be trouble. But at the moment, I'm giving the stock the benefit of the doubt and saying that we're probably going to be in a £1 to £1.20 range rather than going for any nightmare scenario at this point.